Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Power Trading Radio Live, and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your weekend edition. You know, normally John O'Donnell is sitting here off to my left, and he's got such strong opinions about gold and long-term prospects for the market. We wanted to mix it up a little bit, so we brought in Tyler Reeser of RCW Financial. And tell us a little bit about your role over at RCW Financial before we dive into our discussion for today.
Okay. Well, I'd say the main thing that I really focus on there is trying to help people understand a lot of the driving forces behind some of these tangible asset markets. So that that would be gold, silver, platinum, palladium, and of course what we do with rare coins.
I even wore coin cufflinks today. Laurel was kind enough to remind me that I wore coin cufflinks. I didn't even think about it today. All right, so as a tangible part of a portfolio, yesterday we talked a lot about proactive investing and why people should definitely take a more integral part in planning out their long-term finances, because obviously our economy is in let's just say a weird place. Mm-hmm. Let's look at the economy first before we start talking about the coins and the investment side and even the taxation. I know you had some comments about taxation. Yeah. We've got very low inflation. 2% is our goal, and it seems to be we're headed there quickly. Rising interest rate potential. Where do you see things headed right now?
You summed it up right there. The target interest rates, 2%, maybe a little bit less. Here in the last week or so, Janet Yellen came out and said that, we're going to look to maybe quicken up as far as, how fast rates do rise, maybe with the longer term rate a little bit lower than we anticipated. But the idea is still the same there. We're not seeing any inflation. This is in spite of injecting the economy with a lot of money through QE. It's still sitting in the banking system. And, with interest rates in particular, they've been held, artificially low for quite a while now. But at some point, they do have to come up. It's not like they can go too much lower.
Right, yeah. Well, we're seeing things happen over there in Europe. I mean, and you do have a lot of money just sitting there doing nothing on the part of these big banks. Could we see a move similar to that? I know it's pure speculation at this point, but, we saw Europe do something I didn't see coming, and that's part of our problem is that the money's not being lent out here.
Yeah, I don't think anybody really saw that coming. But the reality is right now though that the economy is in better shape than it was 3 or 4 years ago. Yeah. We are moving in the right direction. Energy is playing a huge role in that. Our production through fracking is going through the roof, and that's really going to spur economic growth. Like I said, we haven't seen any inflation. We probably won't see any inflation either unless it flares up, but that would probably be due to unforeseen economic growth or increased GDP growth that nobody's really predicting right now.
Yeah, increased GDP growth. Was that we're like a stand-up routine there? I mean, we had negative 2.9 happen. I'm looking at these interest rates. Actually, last year I had a lot of guests on the program. We're talking about the tapering. I said, I think it's going to happen sooner than later. We need to get out of this whole buying program. And I was saying December it's going to happen. And everyone thought it was crazy. In hindsight, thank goodness I was right, because I see actually interest rates rising, or at least the Fed rate, rising not in 2015, but actually in the end of 2014. Do you see that, or is it something that we're going to just listen to Janet Yellen as the gospel and just going to hold out for then?
I'm actually with Janet Yellen on this. She's been pretty accurate, especially with her forecasting so far, and she's hinted to us, several times now that they're wanting to wait until after we finish up QE, maybe for a significant amount of time, 6 months to a year before they do begin to look at rates. They don't want to do too much too quickly, as, they don't want to, upset the balance that they have right now.
Sure. And I think there's a lot of us who would I'd actually be happy if they upset the balance. Because to me as a trader, it creates a lot of volatility and action out there. Yeah. The other piece you mentioned, inflation. Obviously, they've said over and over again we're targeting 2%. And it, there's this expectation of hyperinflation. We pump so much money into the system. A traditional textbook scholar would say this has to lead to certainly more than 2% inflation or hyperinflation. To what extent can we trust these numbers? To me, it seems like it's a trick. It's a magician's trick. Of course, I have the Merlin name, but it's a magician's trick to make us believe there's no inflation, but there is.
Well, that's a very good question, and believe it or not, that's something that people call and ask me almost every single day. This money, it's all come into the economy. They're telling us that inflation's at 2% or less. The CPI is showing these numbers. Can we really trust that? I think we can. You know, there are private estimates of you know, the amount of inflation out there. You look at something like the the Billion Prices project done by MIT. It's a private estimate that you know, measures online prices, and it's been pretty consistent with what we've seen from the CPI. And you know, in addition to that, if inflation really was you know, let's say 4%, 6%, 8%, whatever, that would mean that GDP growth was just that much lower.
Right.
And that isn't consistent with the employment numbers that we're seeing.
Yeah. Well, it's funny. Yesterday in the show, I was traveling recently, and I ordered a beer at some restaurant, and my friends all got a 12-ounce beer, and I forgot it was an Argentinian beer, and I get it, and it was 11.2 ounces. So no, prices are staying the same. You're just getting less for it.
Right. The quantities are changing. What you can look at, I mean, you can go to the grocery store, you can see price increases, you can see the quantity, decrease, but the price stay the same. But the reality is, price changes aren't necessarily a result of money being injected into the economy. You can look at things like regulation and legislation that can have a pretty drastic effect on prices. Let's take food, for example, agriculture. Farmers are being paid more to burn corn for ethanol than to grow it to eat.
Yeah.
And of course that has a trickle-down effect on the price of beef and milk and everything else. It ends up costing more to grow that product.
Yeah, well, the beauty of commodities and Monsanto, folks, the evil Darth Vader of the commodity world. Hey, they're just an investment, all right, let's do this. We've got about a minute and a half here, but when we come back, I want to talk about tangible assets. Now, yesterday, look, most people when they think of long-term investing are thinking about, I've got a 401k, I can create a little pie chart of mutual funds and I can allocate in there, and maybe I can use options to generate income for that. Maybe you're thinking about your house and pulling money to the house. One other area that we've talked about in the past a couple of times is using precious metals, even rare coins, which we've had a couple great shows on rare coins, and it sounds like you've got an interesting one to show us here a little bit later on. But the utility of a rare coin or precious metals in your portfolio might be an augment that you might consider. And we'll talk at length when we come back, and also in our third segment. One interesting concept about this is there are some benefits with regards to taxation, certain things that we normally don't think of with regards to stocks and commodities, futures, etc. So we'll look at some of the benefits of taxation with rare coins and also share some pictures of rare coins with you. Now, Tyler Reeser is our guest today. He is a consultant over at RCW Financial. If you have questions on anything to do macroeconomic, even precious metals, we would love to hear from you. You can go and Power Blast us out at powertradingradio.com. So for those of you watching right now at home, you can go to powertradingradio.com. There's a little yellow button that says Power Blast. Click it, send on in your questions. Or if you're feeling adventurous and you're one of these new fanangled technology people that wants to use Twitter, go out to Twitter. It's at Trader Marone. We'll be right back after a short break. Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld in with Tyler Reeser of RCW Financial. We're talking about macroeconomics, our opening segment, and I wanted to transition that into another area that we feel is very important, which is long-term wealth management. Certainly, these are very uncertain political times and economic times, but the thing we have to do as investors is figure a way to increase our rate of returns, diversify ourselves so we don't get slammed when the markets correct aggressively or vice versa, keep on rallying. We want to make sure we're spread around so the brunt of those impacts aren't fully felt. Let's talk about tangible assets. We talk about gold in this program a lot, but gold, speaking just about gold, would be a little bit naive and kind of ignorant. There are many other instruments out there, tangible instruments that we can use, and let's look at some of those.
Well, what my firm does is, we really, stop and we take a look at all the different options you have when it comes to tangible assets. It could be gold, silver, platinum, palladium, or even rare coins. Each of these areas have their own pros and cons, advantages and disadvantages, and sometimes it makes sense to, diversify among them.
Sure.
Right now, speaking specifically about gold, I'm not convinced that, it's necessarily a good environment for that. Some of the driving forces behind that over the last few years have been, not inflation, but the fear of inflation, right, which we haven't seen. And then low real interest rates.
Right.
As you know, when interest rates are low, there's no incentive for people to take their money and put it in the bank or a bond or a CD. So people tend to group up in metals at that time, and that's been pretty consistent throughout history.
So if we see a rise in interest rates, which is coming and expected, we theoretically should see gold continue to the downside. Which, in theory,
in theory, that's how it should work. But you've also got to consider that with this inflation that we haven't seen, a lot of people still believe that there's we're right around the corner from the next, big bubble, and things, the world's about to go to hell in a handbasket. But if we continue seeing, moderate GDP growth, and this money enters the system at a, at a slow pace, we're not going to see inflation. And I think people will begin to, move away from that idea. And with, less fear out there, I think that'll, drive people out of the gold market, and you might see a, supply and demand discrepancy there, and push the price down.
It's interesting when you talk about metals, we're thinking, I think many of you are thinking bullion, bulk, and gold coins specifically. We had Paul Busby on a couple times in the program, and he actually scared me by bringing in, I don't know, it was maybe a couple $1 million coin. It was the size of a dime on the program, and it was a bit shocking. Where does this change? When we think about precious metals, a lot of people think buy a bar of gold. A lot of what you do is also with rare coins and looking at very exotic pieces that, if the market crashes 50%, this is still an unbelievable piece. It's probably not going to drop 50%.
Absolutely. It's a completely different approach, and the concept's pretty different. The whole idea behind owning a rare coin is, very similar to owning a piece of fine art, or a 1955 Ferrari, or a 69 Shelby GT500 Mustang.
Or a Porsche 550 Spider, which is what I have. But who's checking?
The idea there is that you're owning something that is in very limited supply. They're not making any more of them. And if you wanted to go out and find another, you couldn't. And those types of items tend to perform very well over time, regardless of everything else that's happening out in the world. And, I'm still a big believer in diversification and asset allocation. But, from that standpoint, this makes sense, as part of that pie.
Yeah, and it's basically supply and demand principles. It's the scarcity of some of these coins. And again, I was shocked when I saw a couple of the pictures of the coins that you guys had brought on. I was like, I'm holding this thing in my hand going, that's my house. I just bought this house, and that is really in the palm of my hand. But it is something that might be interesting for you to look at. Last time we talked a lot about the rates of return, and there were some really interesting numbers out there historically. Rare coins increasing, if my numbers are correct, about 11%, right?
On average, over the last 40 years, that's what the index shows, about 11% annually.
Well, that's 3% better than the S&P, not too shabby. We come back. Well, let's look at some of the advantages of rare coins for your portfolio, some things you might want to consider. We'll also talk about some of the taxation benefits, and we'll show you a nice rare coin, get you guys started. You can also go to their website and check it out. There's a lot of coins on the website, rare coins as well. And I think even the most expensive coin ever sold, you can see some pictures of that one on there as well. All right, Tyler Reeser is our guest today from RCW Financial. If you guys have questions for the two of us, Power Blast is out at powertradingradio.com. Or if you're a social media fan, go out to Twitter. It's at Trader Merlin. We'll be right back after a short break. Hello everybody, welcome back to Power Trading Radio. It is your weekend edition. Our guest today is Tyler Reeser of RCW Financial. We're talking about macroeconomics, kind of why we should take control of our own personal financial future, and using maybe what might be considered alternative investments, some of those being commodities and specifically rare coins. So let's look at some of the advantages of some of these rare coins for our listeners out there, why it might be something to consider, maybe not as your total portfolio, I'm certainly not saying that, but as a piece of your portfolio. Okay.
Yeah, when we talk about rare coins, we're focusing on a market that, historically has had very low volatility. I know volatility is a good thing for, your day trading, but you don't want your overall portfolio, you don't want everything to be, in that constant up and down flux. Yep. So with the rare coin market, the real advantage that you have here is that it's a very strong market. So when you have people owning and investing in, coins that are, whether they're $10,000 or, $500,000, they've got very strong hands. They're able to hold on to that item, and they don't put themselves in the position where they got to run out and fire sell the item.
Right.
So that, gives you some sort of, safety blanket there. A couple of the other benefits to this market is that, it's private, so there are no 1099s. It's very portable. And it's not tied to the economy at all. So, as you enter recessionary periods, this market does well. You have investors looking for tangible assets. As the economy recovers, things get better. The market still does well because you may lose some of that, head in the sand type investor, but you bring in a lot of wealthy collectors that are, looking to, own a specific trophy.
Sure, you mentioned it. It's wealth preservation. Unless your 2-year-old gets a hold of the coin and chews on it, or gets stuck in something. You've got one here. Let's just kind of hold this one up and share with our listeners.
All right. So this is a 1793 Wreath and Vines 1-cent piece. It was minted in 1793.
We've got some images for you, TJ, here as well.
They only created about a little over 63,000 of these.
Okay.
So when you think
seems
about
like a lot,
it seems like a lot, but when you think about it, this was created to actually be used, and it was supposed to be the currency back then. So it's extremely rare that you find one in a mint state condition. It's never been circulated and is in very high quality. As a matter of fact, there are only 6 known to be better than this.
Wow.
Which is a lot of history buffs and collectors, if they want to own the finest known example of this type of coin, there's not a lot of them out there.
And, judging by the picture that TJ's got up here, it's not too many coins where you get a picture of someone who looks like they're totally freaked out and got a fan in front of them either from 1793. All right, so there's the back side of it as well. Interesting, you got the 1/100 to tell you that's 1 cent. So, if we look at, go back one, TJ, there you go. If we look at this coin, and obviously it's a beautiful piece, what is something like this worth?
This coin right here, we have it currently listed at $199,500.
All right. So if you could have a Bentley, which will depreciate significantly each and every year, and ultimately be about a $5,000 Bentley when you finally grind it to pieces. Or you can have a coin, which might, in theory, we don't know, but go up over time as long as you take care of it, preserve it. They come in these nice little rated cases. I actually do have a few. Nothing that's in the $200,000 category. But again, something you might want to consider. There's other elements here too. You mentioned the portability, which is a great thing. Maybe get on an airplane, you can only carry $10,000. I'm just saying. What about the taxation side? I know you had a slide here on taxation I thought you wanted to share.
All right, yeah, so there are really a couple unique advantages to this market that, really make this an area that, makes a whole lot of sense for a long-term investment. First, you have 1031 exchanges. Most people recognize that from real estate, like in kind. Reinvesting your profits in order to defer your taxes. You can do that indefinitely over time. Defer your taxes every year. You get to the point where you pass away, you got to hand this item down. Qualifies for step up in basis. You just eliminated years worth of tax deferred growth, so you have no tax liability there. If your estate is above the the estate tax threshold, you can use subjective value in your favor. How much is this worth? Everybody that you ask is going to give you a different different evaluation on it. Use that to your advantage. Then of course moves duty-free in and out of the country. So for investors that like to carry wealth with them internationally, it makes a lot of sense for that. And there are also a couple different options that you can use to place this in IRAs.
So it's interesting. When you mentioned the 1031 exchange, I'm pretty active in real estate, so for me that is important. I want to take the profits without pulling out, have to pay tax on it, roll it into another property. I had no clue that was available for coins as well. So for those of you who are looking for that flexibility and the ability to take money and keep rolling it without having to go to Uncle Sam with it, 1031 exchange and a lot of these rare coins. Is it just rare coins, or is it also for precious metals?
A lot of different tangible assets qualify for the 1031 exchange, but it's like kind. You've got to use the simpler item for it. So art, bullion, real estate.
Got it. Well, I'd say this bar gold for that bar gold. All right. So where would you like our listeners to go to get more information about the financial aspects of this and more rare coins? I know you've got a couple of different websites out there, but I want to make sure I get the right one.
Okay. Yeah. I would just have people go to rcwfinancial.com. We've got a whole great team of individuals there that are very qualified to talk on the economy, interest rates, inflation, precious metals, and of course rare coins, and why that makes sense from an investment standpoint. And I know a lot of people, when they look at this, they have a hard time saying to themselves, is there really that much value here? So we've developed a couple programs that help, they're training wheel, so to speak. They help bring people into the market where we work alongside with them to see short-term results in the market.
One of the other areas that we have spent a bit of time on this program in the past going over are the reports section. If you click on the resources tab here, it may be something that you're interested in, but skeptical. Totally understand that. Look, shelling out a couple $100,000 for a little tiny coin that you could get lost in your wallet is certainly something to consider. But looking through the reports, you guys have a lot of really great information about the coin market, the gold reports. I loved your little gold warning sign pieces you had out there. That was a great one. That's actually, I think, how we met at one of the Traders Expos. Everybody else was soliciting gold like you got to buy gold. And I remember going by your booth, and there's here's the red flags on what you need to look for when buying gold coins. It's like, wait a minute, you're actually warning people. I like that. There's a sense of morality out there. It's a good thing.
But it's paid off. We've stood our ground. We've talked about the outlook of gold and how there are alternatives to that. And as you've seen over the last 3 years, gold has trended down. Last year it lost 28%. It's not a particularly good environment right now. But if you're still looking to invest in tangible assets, rare coins are a great alternative to gold, and can provide a lot of great benefits to your portfolio.
With gold heading down, I think a lot of listeners might look at this and go, hold on a second here. If you think gold's drifting down, why would I want to buy rare coins? Because a coin that, let's say, a gold coin from, this one's not gold, but from, let's say, 1793, it's got a bullion price, but that's not where the value of it is.
Exactly. The easiest analogy I would give you is, if you owned Vincent van Gogh's Starry Night, we're talking about a $200 million painting.
Mm-hmm.
Home Depot ran a sale on paint. Is that going to affect the value of your painting at all? Not at all. Same thing with rare coins. This is a $200,000 coin. There's, 50 cents worth of copper in there.
Yeah.
I don't care what copper does. It has no effect on this. Same thing with the gold coins that are, truly rare.
All right, well, there you guys have it. If you want more information, go to RCW Financial, get some more information about rare coins and how they might augment your portfolio. Certainly some great tax advantages out there, 1031 exchanges, and the portability pieces as well. Tyler, thank you so much for coming to the program today. I do appreciate it.
Thank you for having me. I appreciate it.
Everybody, we're going to take a quick break. When we come back, it's Friday. It's your weekend edition, which means I do have some economic announcements coming out for Monday's session. Of course, most of you probably aren't going to worry about that until Monday, but when we come back, I will dive into your economic calendar as well as all the earnings announcements coming out for Monday's session. And again, our guest today was Tyler Reeser, RCW Financial. If you want more information about gold coins, precious metals, precious coins, etc., go to RCW Financial to get more information. And again, a lot of great resources out there as well. All right, we're going to take a quick break. When we come back, I'll have all that stuff for you after a short break on PowerTradingRadio.com.